Hi traders, good morning in UK, evening if you're from Australia, and very good morning if you're in the US and you got up early for this sort of action. Huge move on Friday. Yeah, well, huge change in sentiment on Friday. The market was already on the back foot. The US dollar was on the precipice, and then we had that CPI number that came out that was confirming the fears that Janet Yellen had been talking about, in that, you know, she was worried that these inflation issues, the low inflation in the US, was not transitory. She was open to the idea now that it isn't the case. She still thought it was the case, but if these numbers keep on coming in weak, it gives the market the chance to force the hand of the Fed. Now, if you're trading dollar yen, you can see it's under pressure. It's stabilized today, and traders are asking, well, we're going down lower. And the answer is most likely, right? But while stocks are very strong, and stocks are very strong because they believe rate hikes are further off in the distance, and the cause of that is not economic weakness, but just inflation weakness, that's the softer sort of reason for the Fed not to raise rates, then you would suggest that, you know, Euro yen buying, pound yen buying, Aussie yen buying, CAD yen buying will provide a little bit of support for the dollar yen. Should it go lower over time? Yeah, of course, especially if the euro was to break 115. Alright, but the timeline now, because the euro didn't break last Friday, the timeline for the euro breaking the 115 levels probably after the ECB. If the Draghi can't manage to talk down the euro, can't successfully get markets off the idea that the ECB is moving sooner rather than later, then, you know, that setup is really quite clear that a weak US dollar will push the euro above that 115 into a new range towards that 120, and that would push the dollar yen back towards 110 over time. So that scenario is my baseline. That's probably going to happen in the next couple of months, but, you know, it's going to be a slow journey, especially if yields in the US hold up. Now, yields in the US did bounce off 2.3. So on Friday, you saw it go below 2.3, then back up, close at 2.33. That's when the dollar yen was recovering a little bit. Now, so far in the Asian session, we've seen the market drift down lower to 2.3. We have to watch this. This is very, very critical. If the yields keep on dropping in the US, then in the 10-year, then dollar yen is going lower. If they stay stable, then dollar yen's going to meander and go sideways. And if stocks remain strong, there's a chance that dollar yen squeezes back to 113, 113.20. Alright, there is that option in the market. You know, this timeline of the dollar yen going down is not exactly let's go to 110 straight away in the current market. I mean, the Fed has priced out most of the rate hike chance this year. Therefore, you have to have the market pricing out rate hikes next year, and we don't have inflation data for that long, right? I mean, inflation data, if it is transitory, which is the Fed's baseline case, is that it's going to pick up and the Fed's going to be raising rates because employment's strong. Alright, so you have to play the game that's in front of you. If there is some pointing towards a weakening US economy now, then yeah, you'll start to see the Fed rate hikes pushed out from January, March next year. And then you can get more US dollar weakness. Or you can get the euro pushing past 115, and that's another way of getting US dollar weakness. Or you can get stock market falling, which is another way of getting dollar yen weakness. Right, but you don't have those yet, so it's not like, let's not go ultra bearish on the dollar yen, or especially at these levels. The market's already fallen a fair bit. It's still a default way that we expect the market to go. Alright, but you have to be careful that yields, if they somehow bounce, or if there's some comments from Fed members that they don't believe that, you know, the inflation is going to remain low, or they attribute it to just low energy prices, and that other inflation's picking up, core inflation, then you will see the US dollar at these levels, you know, with the euro right near those highs and the Aussie overextended and the dollar CAD overextended, perhaps have a week or two of pushback, or at least sideways trading. I've been saying this to clients all day. You've got to be careful about how bearish you get this late in the game. Right? It's good to have a view, but you're pretty late to the view of selling the US dollar if you're in it now. Yeah, so you've got to be careful about these retracements, which have been happening a lot in the last 6 months. Yeah, the US dollar's managed somehow to survive for a while, and the pound especially is very notorious and difficult and whippy and reversey all the time. Brexit negotiations have really just begun, so the pound breaking 130 is not clear that we're going to 131. Perhaps if the euro breaks 115 in the next week, then yeah, it is pretty much probably, probable that we're going to 135. But you don't want to count the chickens before they hatch. Same with the Aussie. These are very high levels, and the RBA is not the Bank of Canada. And the RBNZ came out today and was talking down the Kiwi dollar. You saw that, quite successful. Lucky for me, I was still holding the one trade I've got going. Well, maybe I don't have that trade anymore. Okay, I have to talk to my friend who has access to this account and ask him why he cut that Aussie Kiwi. I was sharing a little bit this account. I'll ask some questions there. He must have closed out last week on Friday. Alright, regardless, we had some Aussie Kiwi going long there. It might be on my other account. Anyway, Aussie Kiwi is looking very nice because the Kiwi's being jawboned. Now, that means that we can put a line in the sand of where the New Zealand dollar has a little bit of central bank unease, and that's in the high 73s. So the Kiwi actually hasn't followed completely the rest of the pairs. And it's got its major levels to break to bounce back to the top side here. So the Aussie's equivalently back up 74.50. CAD's 76. It's going gangbusters. So the Kiwi is actually lagging most of these other commodity currencies. Is it likely to go higher over time if the US dollar remains weak? Yes, it is. If stocks remain strong, especially. Commodities remain upbeat a little bit? Yes, definitely. And milk prices are a little bit upbeat. So there is that ability, the central banks can only jawbone so much. Same with the ECB. Okay. Hi Wings, hi GK, GJ Scalper, sorry. Oi boys. Hopefully no one got decimated. It's like a bloodbath. I saw a lot of death on Monday. A lot of death on the Aussie actually. People just couldn't believe that the Aussie broke 77.50 so easy. And they went pretty heavy at that level. It's always a little bit dangerous, yeah. I was out completely almost. But it's hard sometimes. I understand that. You roll the dice at key levels. Alright, but where you take your stop is very important. Very important. Have your stops relatively close. Key levels 20-30 pips away. You don't need to put your stop at 78-60 so you can sleep soundly that night. That's only asking, inviting a huge loss to your account, especially if you're trading bigger at a big level because you're pretty confident. Confidence is a killer if you're counter trend trading. You should be less confident if you counter trend. Smaller trades if you counter trend. Regardless of your reasoning, right? It's not safer, it's not better prices, it's strength here in the Aussie. Chinese GDP came out strong, Chinese retail sales were strong, Chinese industrial production was strong. Aussie struggled though during the Asian session to capitalize on this noticeably, and potentially with the profit takings just too strong up here. So you're going to keep an eye on this. Keep an eye on this. If we break back below 78, the level to think about buying is towards 77.70, 77.80. That's why I'll be getting a little buy with a stop at 77, say 40, 30. So I can get a little bit of this. The market seems to have chosen the direction, so you shouldn't doubt it. Sometimes it's a little hard to believe it, but that's not the game you're in. The game is follow the trend. And eventually the Aussie will probably have a day of reckoning, maybe at the RBA in a couple of weeks' time, where you'll see them explicitly say they have no intention, right, or concern about the high Aussie dollar. They've been pretty nonchalant about the Aussie strength at 76, but at 79, you might have, or 80 cents, you might have concern again. And that, while it's only good for 100 points, maybe, if they reinforce their view of not raising rates, similar to how the RBNZ did it a couple of months ago, about 6 months ago, where the Kiwi got shat on, like it was destroyed. That's because the RBA could come out and say we have no intention of moving in 2018 and our current estimates. And what the RBNZ did was a bit more extreme than that. They said 2 years, we don't see any movement. But RBA could learn a little bit from that if they really wanted to hurt the Aussie. And you saw the jawboning from the RBNZ, so you know they're in the game. And you can back Draghi all day, every day, to be bearish come his ECB meeting this Thursday. So it's not that clear to me what's going to happen here. And BOJ notoriously dovish, right? So you know there's every opportunity here for a little bit of a reprieve. Well, at least you should be cautious. Yeah. At least you should be cautious. And you don't mind a rally here. You don't mind the euro falling after Draghi talks down. You don't mind dollar yen squeezing high. Kuroda comes out ultra dovish still. You don't mind, you know, Aussie falling back as well. You know, these things give you better levels to buy. The only one which is more concerning to buy on the dip if it's a sharp move lower is the pound. Because if it's political in nature, it might be of the substance behind it that can encourage not a 100-point fall but a 300-point fall, and your ability to gauge that is hard technically. You know, you have to know the Brexit negotiations and what's being discussed or what's being said, how serious it is in terms of derailing into a hard Brexit, no deal. That takes, you know, that is harder. It just makes it harder there if it's a political reason it's falling. I definitely wouldn't vouch that I wouldn't be able to read the difference between a 100-point fall or 300-point fall on a headline. You know, this is uncharted territory when they're talking about the political Brexit negotiations going on here. Alright, rant is done. Caution. But yeah, let's look to sell the US dollar. Let's hope we can get a nicer level. Dollar yen's yeah, it's cheeky little bonds, aren't they? Just holding for now. Holding for now. So dollar yen's holding for now. No rush at all to get involved here. Alright, let's have a look at a little bit of data there. See what's out and about. Just in case we missed something, let's look at some of the news stories over the weekend. Yeah, Chinese data was strong, everything was strong. But there was another reason to be concerned about China. They had a little meeting over the weekend where Chinese stocks actually fell 5% at the open today. The reining in of excessive credit is what was discussed at a little closed meeting with business leaders, I believe. So stocks got smashed at the start, down 5% at the open. I'm not sure how they finished, but you know, Chinese stocks don't have that bigger effect. RBNZ of currency strength. So this Jeff Baskand, head of operations. So lower New Zealand dollar would help rebalance growth. The currency is about 3% higher than the RBNZ forecasts in the May MPS, monetary policy statement. And combined with the GDP undershoot, we'll have the RBNZ bias to downgrade inflation forecasts. Okay. You know, the question is, when's the next inflation numbers from New Zealand? You know, if you didn't know, now you know. It's tomorrow morning, right? So big data, good for 100 points. Good for 100 points here, and the expectation is a sharp drop. Right now, that's a big drop. Overshot last quarter. We're looking for it to fall back now to 0.2. That's a huge drop. Quarter on quarter, basically no inflation. Very low inflation for this. Okay, now that could easily beat, given the numbers here. So it's I don't know. I mean, a lot of people are selling the Kiwi. I feel like the Kiwi is the one which has not broken those key levels to the top side, and it's still got that potential here. A decent 0.3, 0.4. Probably we're breaking 74 to the top side. Some stops will be pretty big above there, and then you're gonna have to wait for the gonna have to wait for the RBNZ. China Financial, this is the selling pressure came in. So China's Financial Work Conference gave power to the PBOC for macro potential financial regulation in line with expectations. Focus remains on deleveraging and supervision of local government debt. Regardless of what this is, it basically stocks didn't like it. Macroprudential is sort of how a lot of central banks are doing things. That's stuff like the loan limits. Yeah. So for housing, you might need a 10% deposit, then the central bank comes in and says you need a 15% deposit. Just sort of slows down demand without raising rates. The expectations for 0.2, we think they're persistent. Okay, nothing too crazy there. Oh, I don't mind some euro. Gotta be patient, boys, gotta be patient. I really don't mind just straight up buying euro. I'm a little worried that we can't break 115. So if I buy here, you can only put your stop here, asking to be stopped out. Okay, we'll just let it run. We'll let it go, see what happens. It doesn't get easier to buy higher, that's for sure. Definitely doesn't get easier. SocGen's warning about similar things to what we just talked about there. Stretched moves threaten lethargy. So basically that the market doesn't have too much room left to move on the basis of the current stories. While that may not be, true, the stock, it doesn't just slow down because it's overbought or oversold. Like dollar CAD will show you that, but at some point perhaps there's not that much backing behind this. Like, it's still a slow story that the ECB taper is going to happen next year. Recent experience suggests we won't get to the support line. We'll just mess around in this range before pushing high again. That's pretty much the case. I do think we'll get lower than 114 though. Let's have a look at the euro just quickly. There'll be a few stops here. Maybe a little bit dip down, take out these stops if Draghi's bearish enough. Then we can buy off if the stabilizer starts coming back up. That'll be the trade for me. Look at TradeAlerter from UBS and from Goldman. So the fully priced next hike from the Fed is June next year. Happy to play 114, 115 range. Preferring to play short from 112.80, that's where it got to, around 75 I believe. A lot of people probably on this trade. In terms of US data to change the game, there is a little bit tonight. Empire State Manufacturing, if that comes in super strong, might get some doubt into the trader's mind. Carney speaking tomorrow night as well for the pound. Probably not going to speak about monetary policy. He's been speaking a lot about it. Depends how the inflation numbers come out tomorrow, I suppose. Inflation numbers have been quite high in the UK, so if they remain so, then the chances of the market talking about rate hikes, not actually expecting them to raise rates, but talking about it, you don't need much when the market's in an uptrend or broken resistance anyway. See the Kiwi lagging, expect to play catch up eventually. Prefer to play it long. That's basically my view, yeah. But that CPI number tomorrow is really important. And it's quite volatile, so there is chances that you get less than 0.2. But when you set the bar so low, you can't really expect it to come out. In terms of Brett Donnelly, he did put out a call. We'll look at the Goldman after this. The VIX is near all-time lows, guys. So that's just nuts. You can basically, everyone's buying the VIX. A lot of my good traders just going to buy and hold, see how it goes. I can't fight that argument, right? I mean, Trump could say something, North Korea could do something. The VIX being at all-time lows is insane. So the VIX is related to the price of the put options on the S&P. And if S&P starts to move sharply lower, you'll see the VIX spike higher. And when it spikes a lot. So you could double your money. If you buy the VIX here with a stop at 8 and you target 20, there's a strong chance that happens if there's something to rock the boat. Because the unwind will be very, very great in terms of people buying protection from these levels if there is a serious material negative shock to the market. So he's gone bullish on the Kiwi, looking to play it via 1 week calls. That'd be very cheap. They would be very cheap. I do options at my broker, so I can check that. I might check that for tomorrow and just show you the pricing of it. Probably can play it. I mean, looking for a strong CPI is a little bit of a fish, but it's not the worst fish ever, yeah. And dollar CAD, geez. You know, let's have a look at dollar CAD and just ask ourselves, you know, where would a retracement even put us? Like now we can't sell at 127, probably have to sell at 128. 128 to 128.50 if we get a squeeze higher for some reason. It's really, really overdone here. Just work on an RSI and see how far it is actually overdone. I'm guessing 15. Daily is what you want to look at. Oh, not that bad. 21. Okay. Alright. 21. So that low 125 to target, I suppose, for the bulls and the bears. I mean, we could start fishing at around 125 if you like, if it does it quickly. Not really what I'd recommend, but definitely makes sense logically if you're looking for counter trend moves. It'd probably be similar to selling Aussie at 80 cents. You're probably going to be okay. LNG, yeah, there's dollar CAD. Yeah, I wouldn't sell here. I'd sell on a squeeze. You're looking at these squeezes here. You're looking at averages of at least 200 or 300 points. So probably back towards 29 to be safe, 130 even, without really breaking a sweat, right? You got to be a little bit. You got to increase your sizes here when the market's this far overdone. Definitely won't stop at 50 points if it's a good enough reason. Alright guys, finally we'll finish with a little bit of see the Goldman Sachs here, see what they want to say for themselves. So yeah, on the back note, the Donald Trump is losing approval ratings, and it looks like the healthcare bill's got serious issues. And yen shorts are increasing sharply to the highest since 2014. That's something to keep in the back of your mind. Definitely adds to the idea that the dollar yen's going lower, that's for sure. Well, that's a little bit of nothing, isn't it? A little rant with not much in it. Just a little look at the COT reports. Yeah, sorry about starting late, guys. I was a busy day today at work. Never looked at this one before. This is Bank of America, Merrill Lynch. Coils eventually lead to a large move. Yeah, Aussie Kiwi is coiling. It is coiling. And a CPI tomorrow though is so important that I don't know if you can remain long at these levels. I'd take profit right now. It does look like it wants to go higher, but it's just, it does it so choppily that you might get a chance to buy again off 105.50 if that CPI number comes in strong. So this is Aussie since last year. Moving a little bit into overbought now. $200-week moving average is 80.25. See, the scope of the move down was so big that this is nothing here. A move back up into the mid-80s is really on the cards. Without the RBA. With the RBA you can get back to 90. Aussie, I mean, it's been, you know, to be fair, this has been extremely timid and poor price action for 2 or 3 years now. This is actually not the Aussie that I knew in the first 4 years. Well, first 6 years of my trading, sorry. This Aussie is extremely timid. You know, it used to move a lot more than this. So don't be surprised if it changes its stripes and becomes a much more aggressive pair. This is the Aussie Kiwi here. So the fair value of the Aussie Kiwi is above 110 still, in terms of the differential interest rates, so keep that in the back of your mind. If Aussie wants to somehow go running by itself again, and they can do that with stocks if they remain strong. Probably be a China story if anything was to get us really moving. China remaining stronger. Alright guys, so let's see how we develop. Be cautious today. We want to make sure that we enter at the right levels. If you haven't sold dollar yen on that rally, you probably don't have a chance. You haven't bought euro just yet. You can't chase here probably. To me anyway, it's just too risky. But if we do get a revolve down and we get back towards 114.20 and dollar yen back towards 112.80, 12.90, then I wouldn't mind selling up there. I'll be back tomorrow. We'll see if we have anything changed, and we will react to the New Zealand CPI numbers. They're probably the biggest thing. And actually, just after I start streaming, just before I start streaming tomorrow, is the cable CPI numbers. So we'll definitely focus on that tomorrow. Alright, best of luck with your trades, guys.